Welcome to Capital Breakdown. Today, we are venturing deeply into one of India's most robust and influential companies. This particular company is Tata Power. So, let's dive right into exploring all the details about this company, starting from its inception until its future prospects. Initially, who initiated the company and who is currently running it? What were the associated entities that were involved? How much revenue does this company generate? Who owns a majority of its shares? What are the dividend policies of the company? What developmental projects are being planned? And ultimately, is it worth investing in this stock or not? Let's delve deeper into these aspects right away. Part 1. The birth of Tata Power. Imagine you are living in 1911. There is no electricity in India. No lights. No fans. No anything. One man changed that. His name was Jamsetji Tata, the same man who started the Tata Group. He had one dream: take water from the mountains of Western Ghats, convert it into electricity, and give that power to the factories and homes of Mumbai. That dream became reality in 1911, and that company is today known as Tata Power. More than 110 years have passed, and today Tata Power is the largest vertically integrated power company in all of India. What does vertically integrated mean? Think of it like this. You have a lemon tree. You grow the lemon. You squeeze the juice. You put it in a bottle. And you sell it directly to the customer. You do everything yourself from start to finish. That is what Tata Power does. It generates electricity. It carries that electricity through wires. And it delivers that electricity directly to your home. Total power capacity today is 14,111 MW. That means more than 14,000 megawatts of electricity, enough to power millions of homes every single day. Part 2. Who is running this company? Every great company needs a great captain. The captain of Tata Power today is Dr. Praveer Sinha. He is the CEO and Managing Director of Tata Power. Let us understand who this man is. Dr. Praveer Sinha is an electrical engineer. He studied engineering first. Then he did a master's in business law. And then he got his doctorate from IIT Delhi, which is one of the most prestigious colleges in India. He is also a visiting research associate at MIT, which is the world-famous Massachusetts Institute of Technology in America. He has spent nearly 40 years working in the power sector. Before joining Tata Power as CEO, he was the CEO and MD of Tata Power Delhi Distribution Limited. That is the company that supplies electricity to millions of people in North Delhi. Under his leadership, that company became the first utility in India to have a fully integrated smart grid technology system. He joined Tata Power as CEO in May 2018. When he joined, the market cap of Tata Power was only 23,843 crore rupees. Today, it is more than 1,40,000 crore rupees. That is almost 6 times growth in just 7 to 8 years. When he first joined, the company had very high debt and very low profits. He made a clear plan: reduce debt, expand into renewable energy, grow the customer base, bring in big investors. In 2022, he brought in a massive deal. BlackRock, which is the world's largest asset management company, and Mubadala, which is the sovereign wealth fund of UAE, together invested 4,000 crore rupees into Tata Power Renewables. This was called one of the biggest value unlocking moments in the global renewables business. He also took over power distribution in Odisha through a government partnership. This one move grew Tata Power's customer base from 25 lakh customers to 1 crore 20 lakh customers overnight. His term as CEO has been extended till April 2027. The board clearly trusts him, and the results show why. Part 3. The 4 businesses of Tata Power. Now let us break down what Tata Power actually does. It has 4 main businesses. Think of Tata Power like a big supermarket. It has 4 departments. Each department sells something different. Together they make the whole store run. Business 1: transmission and distribution. This is the biggest department. It brings in 62% of all the revenue. Tata Power gives electricity to 1 crore 25 lakh customers. That means 12.5 million homes and offices across Mumbai. Delhi, Odisha, and Ajmer. The transmission network covers 4,633 circuit kilometers. That is like running wires from Mumbai to Delhi and back more than twice. Business 2. Renewable energy. This is the future department, and it is growing the fastest. Tata Power's renewable arm is called TPREL, which stands for Tata Power Renewable Energy Limited. They build solar farms, wind farms, and hybrid projects. Right now they have 5,800 MW of renewable capacity, that is, already working and generating clean electricity, and another 5,800 megawatts is under development. Together, that is 11.6 gigawatts of renewable portfolio. In Q1 FY26, they commissioned 752 megawatts of solar projects in just one quarter. That was a record. It was 112% more than what they did in the same quarter the year before. And in Q3 FY26, the profit from this renewable segment grew by 156% compared to last year. 156% profit growth. That is massive. Business 3. Solar manufacturing. This is the smartest department. Most companies buy solar panels from China. Tata Power decided to make its own. They have a factory in Tirunelveli in Tamil Nadu where they manufacture their own solar cells and solar modules. Now they are going one step further. They are investing 6,500 crore rupees to build a massive 10 gigawatts manufacturing unit for solar wafers and ingots. Wafers and ingots are the raw materials needed to make solar panels. This means in future Tata Power will not depend on any other country for solar manufacturing. They will make everything in India. In Q3 FY26, the profit from solar manufacturing grew by 124%. That is again a huge number. Business 4. EV charging. This is the most exciting new department. Electric vehicles are the future of transport, and every electric vehicle needs a place to charge. Tata Power already has more than 80,000 electron volts charging points across India in public and private locations. Their target is 1 lakh charging stations by 2026. They have partnerships with Tata Motors, Milligram Motor, and Metro Networks. They even opened India's largest EV charging hub called Tata EV Megacharger Hub. Part 4. The real numbers, the financial breakdown. Now let us talk money. Because this is capital breakdown. We break numbers here. Think of a company's finances like your pocket money. You earn some. You spend some. What is left is your profit. But you also have to pay back if you borrowed money. Let us check all of this for Tata Power. Revenue. In Q1 FY26, Tata Power earned 18,035 crore rupees in revenue. That is how much money came in. That was 4.3% more than the same quarter last year, and 5.49% more than the previous quarter. Current share price as of May 2026 is around 439 rupees. Market cap is 1,41,000 crore rupees. EBITDA, which means operating profit. EBITDA was 3,565 crore rupees. That grew 16.4% compared to last year. EBITDA margin improved to 19.77%. When the margin goes up, it means the company is becoming more efficient. It means for every 100 rupees they earn, they are keeping almost 20 rupees as operating profit. That is healthy. Net profit, which is called PAT. PAT was 1,262 crore rupees. That was 6.2% higher than the same quarter last year. In simple terms, if Tata Power was your piggy bank, it saved 1,262 crore more than it spent. The big red flag debt. Now here is the thing we must talk about honestly, because that is capital breakdown. Tata Power has a very high debt. Total debt is more than 70,000 crore rupees. Debt to equity ratio is 156%. That is considered high. Interest coverage ratio is only 2.5 times. That means for every 1 rupee of interest it needs to pay, its earnings can only cover 2.5 rupees. That is a tight situation. But here is the positive side. The debt has actually reduced over the last 5 years from even higher levels. And debtor days, which means how fast customers pay their bills, has improved from 40.6 days to 31.8 days. That means the company is collecting money faster. Part 5. The order book, the future money already waiting. Now this is the most exciting part. The order book. Think of an order book like a restaurant that already has bookings for the next 6 months. The money is already waiting. The work just needs to be done. Tata Power's solar EPC business, which means engineering, procurement and construction, has an order book of 15,870 crore rupees. That means customers have already given orders worth 15,870 crore rupees. This work will be executed over the coming months and years. Out of this, 58% of orders are from third-party customers. That means outside companies and governments are trusting Tata Power to build their solar projects. The rooftop solar EPC order book alone is 1,242 crore rupees. The utility-scale solar project order book is 2,735 crore rupees. On the renewable side, Tata Power has a pipeline of 5.5 GW of renewable energy projects that are planned or under development. Plus they have 2.8 gigawatts of pumped hydro storage projects in the pipeline. Their total third-party EPC project pipeline, including executed and ongoing, stands at 7,400 megawatts. That is a massive amount of work lined up. Some of the biggest orders include projects for NTPC, SJVN, and multiple state governments. These are all long-term government-backed projects, which means stable and guaranteed payments. Part 6. The big future projects that will change everything. Now let us talk about the mega projects that Tata Power is building for the future. Project 1, the Bhutan Hydro Project. Tata Power, along with Druk Green Power Corporation of Bhutan, is building a massive 1,125 megawatts hydroelectric project in Bhutan called the Dorjilung Hydro Project. The World Bank has given $515 million in financing for this project. This project will generate clean electricity 24 hours a day, 7 days a week. No sun needed. No wind needed. Just the flow of water. Just recently, in May 2026, they also identified a new 404 megawatts Nyera Amari project in Bhutan. This takes their total Bhutan hydro pipeline to 5,033 megawatts. That is enormous. Project 2, pumped hydro storage. In Bhiwapuri, Maharashtra, Tata Power is building a 1,000 megawatts pumped hydro storage project. In simple terms, this is like a giant battery. When there is too much solar energy being generated and nobody needs it, you pump water uphill and store it. When electricity is needed, later you let the water flow down and generate power. This will solve one of the biggest problems of renewable energy, which is what do you do when the sun is not shining? Project 3, 10 gigawatts solar manufacturing. As we discussed, Tata Power is building a 10 gigawatts wafer and ingot factory with an investment of 6,500 crore rupees. This will make India self-sufficient in solar manufacturing. No more import dependency on China. Project 4, battery storage. Tata Power signed a deal with NHPC to set up a 30 megawatts and 120 megawatt hours battery storage system in Kerala. Battery storage is the next big business in India's power sector, and Tata Power is already getting orders. Project 5, nuclear energy exploration. The Indian government passed the Shanti Bill, which allows private companies to enter nuclear power generation. Tata Power is now exploring small modular reactors, also called SMRs. This is still in early stages, but if it happens, Tata Power could become an energy company that covers coal, solar, wind, hydro, battery, and nuclear power. No other company in India would have that kind of coverage. Project 6, carbon neutral by 2045. Tata Power has committed to becoming carbon neutral by the year 2045. By 2030, they want 70% of all their electricity to come from clean and green sources. Part 7. Who owns Tata Power? The shareholding breakdown. Now let us talk about who owns this company. Think of Tata Power like a big pizza cut into many slices. Different people own different slices. The promoters. The Tata Group is the biggest owner. They hold 46.86% of the total shares. That means almost half the company belongs to the Tata family of companies. This is a very strong and stable ownership. The promoters have not sold any shares. That shows confidence. The foreign investors. Foreign institutional investors, or FIIs, own 9.46 to 10% of the company. These are big international funds and companies from outside India who have put their money here because they believe in India's energy future. The domestic institutions, Indian mutual funds, insurance companies, and banks own around 16% of the shares. When mutual funds buy a stock, it means professional fund managers believe it is a good investment. The retail investors, ordinary people like you and me, own around 27.65% of Tata Power. That is more than 1 crore small investors across India who have bought this stock. The government holds a very small 0.01%. This shows Tata Power is mostly privately owned and market-driven. Part 8. Dividend, the money Tata Power pays you. Now let us talk about dividend, because many people ask this question. What is a dividend? Very simple. Imagine you buy 1 share of Tata Power. The company makes profits. Instead of keeping all the profit themselves, they share some of it with you. That sharing is called dividend. Tata Power has declared a dividend of 2.25 rupees per share for FY 2026. In FY 2025, they paid 2 rupees per share. The dividend is paid once a year. The dividend yield, which means dividend as a percentage of share price, is around 0.58%. Is this a big dividend? Honestly, no. Tata Power is not a high dividend paying company. That is because they are reinvesting most of their profits into building new projects and expanding their renewable business. Think of it this way. Imagine you have a shop. You make 100 rupees profit. You take 2 rupees out for yourself, and you put 98 rupees back into the shop to make it bigger. That is what Tata Power is doing. Small dividend now, but big growth for the future. For dividend lovers, this may not be the best stock. But for growth investors who want long-term wealth creation, this is the story. Part 9. Risks, the things that could go wrong. We are Capital Breakdown. We do not hide the truth. Let us talk about every risk. Risk 1, the debt mountain. 70,000 crore rupees of debt is a very serious concern. If interest rates go up or if profits slow down, repaying this debt becomes harder. This is the number 1 risk. Risk 2, profits fell in recent quarters. In Q3 FY26, net profit fell 25.1% compared to the same quarter last year. In Q4 FY25, profits also fell 16% from the previous quarter. That means there have been 3 straight quarters where profits have been declining. This is something to watch very carefully. Risk 3, regulatory risk. The government controls electricity prices. If the government decides not to increase tariffs or changes any policy, it directly affects Tata Power's earnings. This is always a risk in the power sector. Risk 4, competition. Adani Green, NTPC Green Energy, Reliance, and JSW Energy are all competing hard in renewables. The competition is getting tougher. Margins could be squeezed. Risk 5, solar raw material prices. Even though Tata Power is building its own manufacturing plant for now, it still depends on global supply chains. If raw material prices go up, profit margins come down. Part 10. The stock price and target. Now the question everyone is waiting for. What is the stock target? Current price as of May 2026 is around 439 rupees. 52-week high was 464 rupees. 52-week low was 342 rupees. The stock has given negative 15% return in the last 1 year. So yes, the stock has underperformed recently. The PE ratio is around 28 times. That means you are paying 28 rupees for every 1 rupee of earnings. That is a slight premium compared to the industry average. But the market is paying this premium because of the renewable growth story. Analyst target for 2026. Most analyst consensus puts the 12-month target between 420 to 490 rupees. That means from current levels there is potential upside of 17 to 36% if everything goes well. Bull case target. If renewable expansion is faster than expected. If debt comes down. If India's power demand grows strongly. Then the bull case target is 600 rupees. Bear case target. if debt increases, if profits keep falling, if regulatory changes hurt earnings, then the bear case is 280 rupees. That is a downside risk of around 36%. Long-term target for 2030. Analysts see Tata Power reaching anywhere between 810 to 1345 rupees by 2030. That is 3x to 4x growth over 5 years if everything works out. Long-term target for 2050. Over 25 years, the projections range up to 4,654 rupees. But these are very long-term estimates with many variables. Part 11. The final verdict capital breakdown conclusion. Let us now bring it all together. Tata Power is a 110-year-old company that is completely reinventing itself for the next 100 years. The leadership under Dr. Praveer Sinha is strong and experienced. The business is diversified across electricity generation, transmission, distribution, solar manufacturing, EV charging, and battery storage. The order book is strong, with more than 15,000 crore rupees of work lined up. The renewable pipeline of 11.6 gigawatts gives clear visibility of future growth. The government of India's push for clean energy is the biggest tailwind for this company. But the debt of 70,000 crore rupees is a real risk that cannot be ignored. And profits have been declining for the last 3 quarters, which is a concern. So what is our final verdict? If you are a short-term investor, this is a risky stock right now, because profits are under pressure. If you are a long-term investor with a 5 to 10-year vision, this is one of the most interesting bets in India's energy sector. Because when India grows, its need for power grows. When the world moves to clean energy, Tata Power is already positioned to be the leader. The company that started by giving light to Mumbai in 1911 may well power the entire future of India by 2030 and beyond. That was your complete Tata Power breakdown. If this video helped you understand the company better, then like the video and subscribe to Capital Breakdown. Because this channel does not just show you stocks. We break them down completely. Stay invested. Stay informed.